G'day all, Benny Reese West. Just going to take a look at gold in this video. Obviously a bit of a rocky ride for a lot of assets since the payrolls number. And gold has not escaped unscathed. So let's just jump in and take a look at it. So as we just jump in here and just to brush over the US dollar. Now of course again we're using the DXY as a proxy. The DXY will of course be a bit stronger in the short term because obviously this week the ECB cut rates, which was completely expected, and obviously Japan is in perpetual easing mode. So because the DXY is so heavily skewed towards the Bank of Japan and the so skewed towards the yen and the euro, it's going to show some strength. Now the payrolls number really put the cat amongst the pigeons. Now I mentioned this in the silver video, but I'll just brush over it again quickly. What the market will do, and I can only say this because I've seen this happen over the course of over more than 2 decades, is everyone sort of believes, and I think rightly so, that the next moving rates will be down, that there'll be a cut. It's just a matter of timing. So the market wants to position for the cut before the cuts occur, okay? Because players will view that once the cuts occur as being too late, you've missed the best, entry points, and you can't crow to everyone who will listen about how good you are. So what happens is the market positions for cuts, and when something like the payrolls number comes along, which throws the timing of the cuts out of whack, you've got to cover. So we've had this big sharp move back. Now that is actually a green candle. Let me just fix this up. Well, a blue candle, which means it's going up. Okay, so we're not above the pivots. That's the point here. But we are now reaching back into the zone, okay, into this resistance. So what you can see here is quite clearly that the US dollar is the DXY has just held this area, which is just lined up with this retracement zone, and we've rejected it quite a few times now. So this is a bit of a warning shot. I think you just got to keep, if you do want to consider the direction of the US dollar in your gold trading, you've got to consider this, right? Because this is held, and now we're pushing back up here. So I would suggest that this will probably test up into this zone at the very least next week, and we are then definitely a chance of breaking this downtrend that we've been in, this lower highs, lower lows sort of scenario, because now we've just bottomed out here again on the way back down. So does that mean that the US dollar is now set for a bit of a test back up? Now I would suggest that it probably is for the next couple of days at least. But overall, I still remain of the view that we're coming off because we will cut rates. Okay, so that US dollar will weaken off eventually. It's all about the timing. So just keep an eye on this, because I think we bust through here. We're getting up into this zone. And yes, if we start getting above here, well, the problem for the gold market then will be that the US dollar will be probably almost certainly in an uptrend, and that's got to be considered. So just looking at gold itself now, this was kind of the range that we'd been stuck in for a while, right? So this has been going on for a few weeks, really. We're on a 4-hour here, but even if you took it into a daily, let's just squeeze out here a little bit. We were stuck in this range, right? We were going nowhere, which was kind of probably a bit frustrating because other metals, silver, etc., were really charging ahead. Whether or not you could make a Wyckoff distribution case here, I'm not so sure, but this looks definitely like a classic sort of up thrust, right? The failed breakout. Even though in terms of failed breakouts, this went on for quite some time. I mean, usually when I would think of a failed breakout, I wouldn't think of the market spending that much time above the range. So maybe this is not the best trading range, but I think you can make a case that this was very sideways and not really going anywhere. But obviously, since payrolls came out, this is obviously when payrolls would have come out, we failed away very, very badly. Let's just bring this down to the hourly. Actually, this failed before payrolls. This looks like it's failed away at the start of Europe. Okay, so put that into the mix. It's all just part of the flavour. So we failed away very badly. I mean, there's not much other way you can sort of say about it. So when I look at this though, I just sort of think, okay, well look, this is playing measured move ball here, right? So I think this is just your overall structure. We haven't quite hit that target, But that target to me just sits, as it does sit, is right at the bottom of all this structure that we've just got going on through here. So we are sort of just tapping into that. Okay. But for me, I just think the way that the market's, I'm going to get rid of this now because I don't think it's as relevant. For me, the way the market's shaping at the moment, and I'm just thinking about the fallout come Monday, etc. There will be a retracement because there always is, but it's just a question of whether or not this is the bottom. We might go a bit deeper, but for me, same way as I'm looking at silver in the short term, even though I think overall this will go higher, I think in the short term, I'm still looking for, that sort of thing is the next trade. I'm a seller whilst ever this market is doing this. Okay. So to me, this kind of looks, well, the other thing I would be considering here is, the one-to-one move. So I would say, one move, the corrective, and then that would constitute the one-to-one. So that is going a little bit deeper than perhaps we would like to see. It's not a guarantee. Nothing is a guarantee, but that would be the general idea of what I'd be looking for. So we may not get a one-to-one move. We may get a bigger move, so that's something else that we've got to consider. I mean, it's not impossible that we, if we're coming off the bottom here, that we might reach all the way down and touch into the 50. I mean, that is definitely not out of the realms of probability. Okay, so that would mean, obviously we've got an extended move here, and then, Ellioticians will start going, well, there's an impulse up here, and then, you're probably talking about like an A wave, a B wave, and a C wave to come down here, but I think the actual structure as itself is that's probably fine. How you tie it into the overall picture. Why I don't really apply Elliott wave theory to gold is because Elliott wave theory would suggest that the market's going to build on itself wave after wave, going ever higher, and the waves will constantly expand. So I think that sort of suits itself to stock indexes and, say, something like Bitcoin. But gold, maybe not so much, right? I mean, will gold go up forever? I think that's the question. I'm not sure that the wave theory overall will help that. But certainly in the short term, just thinking about corrective moves, an A wave, a B wave, a C wave, certainly not out of the realms of possibility. So that would be my point of call as we sit here with gold this week. You've probably got a few cases either way. So, you've got all this sort of structure and stuff down here that we've just tapped into with the measured move target there. So for me, I'll be looking to see where this bottoms, keeping an eye on the US dollar, of course, and looking for the retracement trade. That would be how personally I'm going to do it. You got to do it whichever way you want to do it. I'm not offering advice. I'm just telling you what I would do. So that would be what I'd be looking for. The caveat to all that, if I change my mind, would be that there's another data point which shifts the market back the other way, and that could definitely easily occur. Okay. But for me, the only thing I would say is, just in my opinion, this would be a bad place to initiate a short. I certainly would be doing it. I'd be hoping for some sort of three-wave move back up into the retracement zone, and then I'd be thinking about having another crack at the short. That's how I would play. Once I get stopped out, then the problem would be this would be the start of an uptrend. But once I'd just keep selling it until I get stopped out. Once I get stopped out, I'll be looking for it to come back the other way. So that's where we sit with gold. I don't think there's too much more to say. We've highlighted the areas, we've highlighted the structure. I've highlighted how I'm going to approach it next week. So you just do what's right for you, but that's how I see it. So thanks for watching. If you did like this, don't forget to hit like and subscribe. Or if you didn't like it, don't forget to hit the dislike, which someone likes to do. And I'll see you in the next video. Bye for now.